You can mark May 20th, 2021 on your calendar. This is a day that changed everything for money. The Federal Reserve issued a news release featuring a video from the central bank chief, Jerome Powell. It captured headlines because it consisted of how the Fed chair is seeking public input on digital currencies. As a new form of money continues to increase in popularity, the Echos building does not desire to be left behind. As a result, the Fed will be issuing a new discussion paper this summer that focuses on the Echos building's plans for a central bank digital currency, or CBDC. The primary concern is that a CBDC would have an effect on everything from monetary policy to consumer protection to legal liabilities and, of course, our privacy. Powell insisted that a CBDC would complement cash and private sector digital forms of the dollar and not replace physical cash. But can anyone believe that the Federal Reserve has not initiated any long-term plans to engage in a war on cash? Over the last few years, more central banks have been embracing the digitization of fiat currencies, so why would the Fed be one of the last organizations to not join the fun? The key question is this a turning point for the cash in your pocket? The U.S. government officially adopting a digital currency solely had been thought to be a matter of when, not if. But based on remarks from the top officials, a digital dollar appears inevitable. In October 2020, Powell told a panel hosted by the International Monetary Fund during its annual meeting that the central bank had not made a decision on digital currencies because they need a lot of consultation. In February 2021, Powell revealed that a digital dollar is, quote, a high priority project, unquote. A month later, the Fed chair conveyed to the Bank of International Settlements during an event on central bank innovation that, quote, we would not proceed with this without support from Congress.
With banks for funding, we also, in a time of severe stress, don't want to create the basis for a run. And so there's just a tremendous amount of thinking going on how we can capture the potential benefits while also managing those potential risks.
Unquote. Indeed, it looks like it has been a gradual change of tone over the past year, and it is not only Powell who has evolved on this issue. A few weeks ago, Lael Brainard, a Federal Reserve Board of Governors, pressed the case for a digital dollar, telling a conference presented by CoinDesk, quote, the Federal Reserve remains committed to ensuring that the public has access to safe, reliable, and secure means of payment, including cash. But what makes Brainard's comments fascinating is that she also argued against stablecoins and called for the need to counter private-backed stablecoins with the CBDC. Earlier this year, former Chair and Treasury Secretary Janet Yellen revealed that, quote, it makes sense for central banks to be looking at, unquote, issuing sovereign digital currencies. In the world's second largest economy, the People's Bank of China, in collaboration with the central government, launched the digital yuan. Tens of billions of dollars worth of transactions have already been executed using the digital yuan. The European Central Bank, the Bank of China, the Bank of England, and many other central banks are now flirting with CBDCs also. Now the next question is, will a digital dollar eventually replace physical cash? The answer is yes. It's obvious that the government has desires to provide an alternative to cash. Nothing lasts forever. And when you are afraid of popping the everything bubble, the only thing the Federal Reserve can do is provide more liquidity to the system so that confidence remains in it. The ultimate fear of all central banks is the threat of a severe market crash. What happened in March 2020 was just a warm-up in comparison to what's coming. The only way Uncle Sam can continue to run deficits to keep the fake recovery going is to borrow, to spend. The Federal Reserve is under a lot of pressure to keep interest rates low to provide the cash. How low can interest rates go is the next question, and right now we are near 0% on the Fed funds rate. The mere threat of negative will be enough to make cash a threat in the public's hands. If the cost to hold money at a bank was negative, depositors would withdraw funds fast. If the Federal Reserve was forced to take real interest rates negative, that would be their only hope of providing cushion for a recovery narrative moving forward. So what does this mean? Kiss your cash goodbye. The old paper dollar system will be finalized and they will be forced to institute a paperless substitute. Whether it is the excuse of a technological innovation or the fallout after a global market meltdown, Washington will never let a good crisis go to waste. The nation's capital is known for its partisan nature, but when there is this much consensus, it is almost guaranteed that it will be out with the old and in with the new. Perhaps May 20th, 2021 is the date that the history books will declare the Fed won the war on cash. But for now, we will just have to wait and see. In the meantime, the clock is ticking, so make sure you're using the remaining purchasing power of whatever cash you have to get your weight up while the price is affordable and the supply is obtainable. Hope you enjoyed this video. Hit the like button, share this video so others can be given a heads up as to what's already occurring, because by the time this news hits the mainstream narrative, it'll be too late. Ask yourself, wouldn't you want to know ahead of time? See you in the next video.